Where do you see the Lloyd's market in 5 years, and what do you believe teams need to be doing right now to not get left behind?
To adopt the technology, which I can say like how the initiative Lloyd's market is taking, they are just hiring most of the AI agents. They're, within 5 years, Lloyd's would be a more strengthened, more depth with the market.
How can the underwriters and the head of underwriting, chief underwriting officers, can use technology to achieve that advice that you just gave them?
ChatGPT is very famous now, and this one Copilot is very important, and they should go on with because most of the what I would say seasonal underwriters, particularly like I would say I start my career in like 20 years ago, so we were not that much equipped with the quality at that time, IT basically. So now adoption of things like how to adopt the technology, it's very, very important for underwriter.
Hi, everybody. Welcome to Inside Delegated Authority. And today's guest is Abdul Rahim, an underwriter who spent over 20 years writing property, power, and energy risks across 4 countries, from Pakistan to the Gulf to Lloyd's of London. Abdul currently underwrites at Syndicate 2880, which is the first Lloyd syndicates in a box operating out of Dubai's AFC, sitting right at the edge of where Lloyd's is expanding next. He's been on the broker side, the carrier side, and the reinsurance side, which means he's seen how submissions actually move through the system from every single angle. Abdul, welcome to the show.
Thank you so much, Daniel. Thank you so much once again having me here in the greatest podcast channel, to the one which you just offered to me. And
Thank you.
First of all, thank you because you had just reviewed my profile and asked me, because most of the time I didn't see the people, mostly like from the insurance industry. Particularly, I'm happy someone is working on a great way.
Appreciate that. We do what it's in our control to make a better industry and keep it growing. Abdul, you've been in insurance for over 20 years now, and you've worked across Pakistan, the UAE, and into the Lloyd's market. Take us back to what pulled you into this industry in the first place.
Thank you so much. Most of the prompt you have already given about my I do, which industry I am. So yes, actually, I'm having engineering background, and I did my master's in insurance and risk management from Pakistan, one of the top university. So like most of the people in this industry in our country, it's not like they come by choice. It was just like when I finished my education, have the insurance and risk management qualification plus engineering. So one of the top company, they just interviewed me for their risk management position. So I started my career for the risk management scenario, where I do the risk surveys, particularly for the industry of sugar mills, textile, steel, most of that. So initially, when I started my career, I was a little bit feeling boring, particularly like I'm having engineers and I'm having some more qualifications to do work in more industries, like how we were listening about our most of the industry people and all. So, but after that, I learned like it's like a very amazing industry where I entered in. And because it's a combination of most of the industry experts, like engineers are there, IT engineers are there, doctors are there, lawyers are there in our industry. So that's how it was giving me a passion to work in this industry. Then I started my further qualifications like CII from London, and then I started to help to particularly to the company to underwrite most of the complex risk which they were just like dipping, particularly from the industries. So that's how I came in this insurance industry, which I'm really proud of nowadays.
Yeah, I appreciate the context, and you have the opportunity to sit on both sides. The brokerage side when you were at Capital Shield, and now the underwriting side at Lloyd's. How did crossing that line change the way you see risk?
Yes, very good question, because since I started my career as a risk engineer and underwriter, and I spent almost 8 years in Pakistan to work with most of the complex and mega risk to underwrite for the one territory, that is Pakistan. And after that, I moved to Dubai and I got a chance in a broker. So broker and underwriting, it's like, it was, for me, it was an entire classical difference, like particularly both sides a bit different. Once I was in underwriting, I was just sitting on the capital. Capital steward is the classical, what I would say, approach, particularly to protect the company's money in sense of treaty, in sense of claims, in sense of operational way, because most of the insurance companies' bodies, they were just relying on the underwriters, how the underwriting philosophies, because all the financial works with the people who put a stake on the company. So once I entered into the broking side is totally different, where my job was to protect the client's interest. That client can be a paper mill, that client can be a sugar mill, that client can be any of the textile or any industry which who always seeks insurance. So in broking, I started particularly to consult to the client, like what is their gaps, which they were not aware about. Like once the loss had happened, so ultimately they were just surprised. Okay, this clause was not there because insurance is just like a contract between insured and insurance company. That job was actually a little bit hectic in it, like particularly because you are doing two things: you are negotiating with the insurance company, and you are maintaining your clients as well. In underwriting, you will always see how your portfolio is going on, how you are managing your accumulations, how you are managing your treaty guidelines. But in broking, you definitely will see like how the client is protected, either the wordings which insurance company is doing, either client is fully protected in it, either the premium which you are negotiating might be some other brokers or competitors will come and they will offer something in a better way with the better clauses. So these were the challenges, these were the things which I was enjoying in a way, but I learned a lot because with underwriting pen, I was having a one perspective to underwrite the risk. But once I was in a broking side, so that opens a door to me, like how client looks and how client thought about their risk. So it's giving a what we call combo combinations to me.
Yeah, that combo combinations comes with a holistic view, I would say. And that took you to where you are today at Syndicate 2880, which is the first Lloyd syndicate in a box operating from the IFC in Dubai. So I would say this is pretty new for people who are starting to hear more about this. What's different about underwriting from Dubai versus sitting in the Lloyd's building in London?
Yes, I really proud to have to part of the syndicates, and I'm doing underwriting for Lloyd Syndicate 2880. Yes, because like as I mentioned in earlier, like I started in Dubai, like from the broking side, and I came to the insurance company also. Like I was leading one of the department, so it's bit different actually. Once I was part of the local company here, the main thing is proximity of risk, because in insurance industry most of the time your closeness to the risk, because most of the stakeholders that are very important, like once you have the engineering submissions, so you would have a direct contact with the EPC contractors here. Okay, once you have something from energy side, so energy operators are sitting locally, and you would have the local brokerage consultants and brokers are also there, where you can easily meet to them face to face. Even you can go and you can visit the risk particularly, so the market knows to you, the underwriter knows to you, the broker, they were very well about like how you're underwriting and how the thing is. So proximity of the risk is very important, which particularly from the sitting in London, that was entirely different. Though the process, the governance of Lloyd's and the data integrity, like how the data dense is from the London side, that is also a very important factor which we cannot ignore in it. So ultimately, yeah, there is a difference. So the edge between go to the local market, but how the Lloyd syndicate and how it seems like that, because most of the insurance companies, they have a pen of reinsurance pen, mostly local from Dubai or from any Gulf, where they do write risk to the regionally, but they don't have the aspects from the internationally. Like Syndicate is the one who was the, like, it's a first, as you mentioned, inbox in a capacity. It's like unique. So we approach to the whole Asia market, Asia Pacific, Europe, Australia, New Zealand, and the entirely legacy regions, whatever. Though we can write to the local business, particularly from the Gulf side, but since it's like we do have also local company which is part of the Lloyd's group. So ultimately, our focus is to the main Asia Pacific and Europe and that Latin market. So these are the differences which people doesn't understand particularly. But yes, we are in the market since from 4 years. Now brokers, most of the reinsurance brokers, particularly they understand that. But our market is London, Singapore, and Australia, basically.
Those are very different markets. And if you don't mind me walking me through how a typical week for you is right now. You're underwriting property, power, mining, engineering. What does that flow of deals actually look like in the day to day with all these geographic hubs that you're covering?
Yes. It's like same underwriting, like how we are dealing with the direct also facultative is a bit different, but once you would have an international pen and you have different versatile kind of informations throughout the world. So that is basically a little bit giving leverages to you particularly. So how we start our work like with the screening of new inquiries, basically because 4 markets, we are working with the 4 markets, so different timings are there. So we have new inquiries from the all regions, from all countries. Then we would have we start up the morning from the renewals. That is a very important factor. Mostly renewable negotiations with internally and externally also. And then we would have, once the inquiry, so we will, because we need to manage so many things technically. We manage our portfolio, like how NatCat we can control throughout, like whenever we have a risk from Australia, so how we can manage a NatCat risk. Then we will have our ROE, return on equity, like how we can manage. Most of the time, Lloyd's provides their pricing tools, particularly to see how your price is adequate once you're offering something. So the to see the market intelligence particularly, and to work on internally operational, how the policies will book, how we can manage many brokers who come with the same inquiry the same time. So what is their differences and what are our relation with those brokers? So there are so many things which our underwriter starts, but ultimately it ends up with the judgment of the underwriters. So how it will conclude. So that's the core pacific and integrity of that.
Yeah, I would say that this is a people business and relationship matter the most. And I would say underwriters excel and being on the phone, talking to the reinsurance brokers to make sure that a deal can be made. But you've underwritten multiple, let's say, property and engineering, renewable energy, powered projects, like all around the globe. These aren't cookie cutter risks. How do you first, let's say, prioritize them? Because if you're getting a lot of deals from multiple brokers at the same time, how much time does it go to actually assessing the risk versus just organizing the information to be able to do that?
Very important question, actually. Yes, because engineering, particularly power and renewable, those are the niche markets and niche risk. Basically, everybody and everyone cannot understand until they would have a niche experience and they would have a qualification about to understand those risks. So these are the biggest, we can say, a risk which underwriters have. It's not like once we have the submission from the broker and you can conclude immediately. So there are so many factors there, and there are so many markets. Like if we would have the request from London or Australia, that sometime we can say, yes, we would have a bunch of data and very professional data, because they are very good in managing to data and like what to show to the underwriter. It can be, risk survey reports could be there, some assets list and some diagrams, particularly about this, the loss history, what are the, like how risk made in it, how the risk behavior, and about their catastrophic management, how the client's behavior it, because how the client is good in it. So there are so many things which usually we scroll, and ultimately it took us, if you'll ask me, if I'm quoting to a one power account of, so ultimately it take me 2 to 3 hours easily to process all the information. Because what is underwriter strength? Underwriter strength is to the clarity of the information. And first we are checking like how the appetite is, how the appetite will go, and against our whatever our guidelines are, either is there any cross matching in it. So within 2 to 3 hours we can quote one of the renewable or power account or mining account. So that's it.
So you've done reinsurance, fac placements, and direct underwriting. Just to name a few things you have done. Where in that chain does data quality break down the most? And what's the downstream impact or cost when that happens?
Yes, since you are conducting the insurance thing, so particularly, direct underwriting and fac underwriting, it's a difference. As I mentioned earlier, because once you are in a direct underwriting, so ultimately you have a proximity with the many stakeholders, like brokers are there locally, you can grab to them, and like whatever the clients, they are close to you. Even you can review, like pass by the risk, and you can go by surveys and all. So that data, I would say, more sound, more accurate, and ultimately you can witness in it. But once you are in the fact side, so ultimately you have to believe on whatever the data you are receiving in it. Either nowadays technology is so quick, so fast, ultimately, like most of the underwriters, they're using AI to check the data and all. So data density, data accuracy, what I would say in direct, it's more accurate, more powerful, more strong. But yes, there is a little bit lack in the fact side. Ultimately, for us, because since we are a Lloyd's market and we are working with only Lloyd's approved broker, professional big markets who are there, and they're very professional to know. So it's a professional dealing from both sides. So lacking bit, but what I would say, it's not like it's like roughly dealt with the market. No, because most of the time accurate data is there. So by cost, it's yes, in fact side it's a bit higher, but direct you can manage easily in a local angle.
Yeah, that's true. The idea is to have the data 1000%. The workaround that I've seen companies do is be on the phone, like, hey, you missed this document. Hey, this is not accurate. Hey, please help me. And that's because
Absolutely.
in insurance,
And
everybody
mostly
knows
mostly
everybody.
it depends on, because fact, mostly that we can say it's not very reliable business which will come to the next year to you. But in a direct side, most of the renewals, they are renewing with one company. So ultimately underwriters fully equipped with whatever the data they had last year and whatever the changing, so ultimately they can grab easily the information. In fact, it's a bit different. How it bit different? Because sometimes, like, I'm a fact underwriter now, like I'm writing capacity. This time might be I have written the risk from direct cedent to the from Australia, but next time might be the same risk will come to me from London as a retrocession, because one of the reinsurance they have already written and they asked me for the retrocession. So that would be a different channel and different angle to me that time. So that's how it's differentiate.
Yeah, retrocession. When I started in this industry, I was like, "What, insurance to the insurance to the insurance?" Like, you can go as deep as you want. Something
Of
that
course,
that you,
everyone want protection.
yeah, everybody wants to pass. They say you got to keep at least
Exactly.
X% of the risk, so and so on. I found that very interesting. And right now, we have seen this wave of AI. Everybody's talking about it. Everybody's figuring out how to do it. I've seen a lot of syndicates and MGAs bringing consultants to help them adopt AI and new technologies. The pattern that I've seen so far. From what you've seen, what has worked and what hasn't?
To be honest, AI is impressive. It's very impressive. And most of the companies and of course, Lloyds have already been started with their syndicates to grab the consultant to have to with the AI tool. And there are so many thousands of the tools from the AI which have already been introduced into the market. So AI, what I would say, it's important once you have the extraction of data, processing of data, to manage in a way, like if you would driven with data accuracy, and also ultimately, yes, it will help a lot to you. Might be it can save your time ultimately. If you are reviewing 4 or 5 risks in a day and you will give this instructions to AI, so they will come with the results and more. If you're familiar with the risk, ultimately that you can easily judge. But if you'll ask me, AI can take a lead from the underwriting side, a sound judgment, disciplined underwriting, and these areas, I'm not sure like AI can help in it. So extraction of data, up to that, that I can also believe. but I don't think so it can overcome to the underwriting, or it can harm to the underwriter's job or underwriting efficiencies and all. So underwriter would still definitely from the like, if I'll give an example to you particularly, because underwriter is keeping the legacy of years, like a decades. If I'm saying the risk from Germany, like this risk, I know that risk from 5 years. I know their history. I know their clients, like the insured behavior. I know how they works and what are the seasons accuracy in this, what are the losses and how they would have the improvements in it. So these are in my mind. This I can easily intact with my human behavior and all. But AI won't. AI will give a pure data calculations to you. Based on data calculation, might be you would have a very wrong decision, which can impact to your to your profitability and all.
Yeah, I agree. I would say hardly an AI can replace an underwriter's role nowadays. I'm pretty sure you will enhance it because it's a people business. And I don't know,
Yeah,
the
yeah.
moment I see AI entering a cocktail, I would say, yeah, maybe AI can take an
It
underwriter's
will
place.
help, but it will not replace.
I agree. And then we have the other side of the coin, which is people within the industry saying like, I don't know, I'm not sure if this is gonna work. I wanna wait. Can I trust the AI? Can I actually implement it? Our data is too messy. AI won't be able to read it. Everything is unique. Everything is bespoke. You've dealt with submissions from every format across the globe. Is that something that's actually you say, okay, AI cannot work with what you have seen so far in your day to day?
Yes, somehow it's we can agree in it, but somehow like the information about the particularly of risk, like if you are doing one risk and you have to manage the scope of the risk. Scope, if it's like a very slangs in insurance, particularly construction, occupancy, and protection and exposure, like those areas, underwriter can manage only, not the AI. So I will not buy particularly on this. Like this, yeah, it will help, but it will not intersect your underwriting skills and all.
And then we see the teams that are looking to scale. I would say most MGAs that are created, their goal is to become as big as possible and underwrite as much as gross written premium as possible. But the tendency or the solution that was so far was hire more people, add more processes. What do you feel is the ceiling on that approach? And at what point does throwing bodies to the problem stops working?
People cannot be scaled. They always be in a linear side, particularly, adding underwriters in the teams, that can be a coordination cost. What I would say might be it can help to exaggerate the thing, but particularly to addition of the underwriters, it will help to to having a very accurate information, which might be a team which is under stressed, which is overloaded. They're overloading it, and if they would have a particular sources who can run through the process and all, particularly with the company, the guidelines and all, because it's depends. See, if you have one underwriter and is managing the full territory, ultimately with the times, might be he can take one wrong decision. That clause, that wordings, that decisions can impact to the billions from the insurance company side. So, and that will not impact one side ultimately, because you have your driven treaties. It can burn your treaty and all. So yes, having this leniency is important, particularly adding the underwriter. But I would suggest always adding the people in the system. That always be a positive side.
Yeah, I would say I was reading the other day, like good judgment comes from a lot of bad judgment, and that's how we tend to evolve and grow. What's the most expensive lessons Abdul you've learned in your career? Something that if you could quantify it in time or money or even relationships.
Yes, because should always be a learner. Always be like you have to be a student side, particularly whenever there is like, even I'm been in this industry for 20 years, and every day I'm learning one thing. So in this industry, I would say what I had learned. Your one mistakes are over glance something, one clause, if it is like protectedly, or it is not fully articulatedly how you have in your treaty or in your underwriting guidelines, if you that skipped one thing, and that can be a problematic, that can be a messy to the your whole portfolio. So it can challenge to your decades of experience in technical side, because most of the time you are busy with the technical aspects and the commercial aspects. So what I did learn, underwriter should not leave the focus of the clarity. So this clarity is very important about any underwriter, particularly to see how he's managing and how he's reviewing, particularly on his day-to-day activities about the risk. So that's thing which I learned from my side. So whenever things are coming on my table, I'm always going deep from the technical end. I started reviewing from the COPE side, particularly like how big mega risk to be reviewed. Then I'm seeing the factors, then I'm seeing the relation of the market. And sometimes we have to see like which broker is approaching us. So how either they're the market broker and how this risk came to them. Ultimately, we should avoid any misfall information, the one which we are receiving in it. So those are the factors which I learned. I never ignore the policy wordings, like it can be bespoke, can be anything which broker is showing to us. You never know. So ultimately you have to be in it. You have to see like what are the material facts which broker is showing to you, and either you are on it, either it should be in front of your eyes or not. So that thing which I learned from my experience.
Thank you very much for sharing. And then right now we have Lloyd's pushing Blueprint 2 to have to digitize the market, I would say. And Dubai is becoming a serious underwriting hub. Where do you see the Lloyd's marketing in 5 years, and what do you believe teams need to be doing right now to not get left behind?
See, underwriters, Lloyd's market is always be a big market, and insurance starts from Lloyd's. Everyone know about that, and they are in the market from years, from more than even 100 years. Yeah, technology to adopt the technology, which I can say like how the initiative Lloyd's market is taking. They are just hiring most of the AI agents. They are just suggesting to the syndicates and their market to grip with the AI tools, and it should be, the focused technology binding underwriting should be there. So particularly what I would say, like most of the constructive or most of the big countries, they're already having the Lloyd's platform in their countries. So what I would say, geographically, they are exporting their talented knowledge and missions, and geographically they are improving in a way. Most of the countries I can say where Lloyd's they don't have the sets over there, now they are approaching to those market. So within 5 years with the industry, and now the thing is, since technologies have already been grown up in a way, like particularly to once Lloyd's is offering a capacity for sex in Africa, the underwriters they are sitting, because most of the underwriters, if they had qualified from London, and most of the IT experts who are qualified from London, they are sitting in African market, and they would have that capacity. So of course they can be a part of the profitability of the Lloyd side. So I'm saying within 5 years, Lloyd's would be a more strengthened, more depth with the market, which they are already in the process and all. So that's how I'm seeing the best future, particularly of the market, not from the Lloyd side. Lloyd, definitely, it's a driven market, particularly, and the whole market is driven by them. So I don't have any doubt.
That's amazing. And you got a network that spans from Karachi to London to Dubai to Sydney. If you could give one piece of operational advice to every head of underwriting, every underwriter listening right now, regardless or of where they sit, what would that be?
Yes, I will repeat my word. It should be relentlessly, clarity of the risk, actually. That is very, very important. Once any risk in front of any underwriter's table, so they should be very clear about like what is it, and they should be clear about the COPE things, and they should aware about particularly appetites. Like they should be expert. Principally, they should be agreeing with whatever they are offering to the broker or to the insured. So they known to in it, and what they are offering, they should mean in it. So they should be expert in their appetite. They should be expert in their financials, particularly the company financials. They should be driven by like whatever the policy wordings, either they are offering something narratively bespoke wording to the brokers and all. These things are always been, because that's just a skin protection of the underwriters, because underwriters holds the credibility basically, and credibility is the principle for any underwriter. So once he will lose that credibility, so it mean everything will against to him. So that's my advice to all of the industry and underwriter. So open their eyes, particularly on the risk, and they should be very clear about the guidelines, whatever they had made for their seniors and all. So that's an important thing for any underwriter.
Amazing, Abdul. Thanks for sharing. And how can the underwriters and the head of underwritings, chief underwriting officers, can use technology to achieve that advice that you just gave them?
Of course, now everybody, because like most of the market which I'm hearing, like Chat GPT is very famous now, but and this one Copilot is very important, and they should go on with the, because most of the, what I would say, seasonal underwriters, particularly, like I would say, I start my career in like 20 years ago, so we were not that much equipped with the quality at that time, IT basically. So now adoption of things, like how to adopt the technology, it's very, very important for underwriter. Go with that scenario, particularly with they will lose that part. So might be they can skip anything which is the world is expecting from them.
No, appreciate that thought. Last question for you, Abdul. What's one thing that the industry needs to stop doing right now?
Yeah, that is also so many things from our industry, because once you will ask this question to any senior, but particularly they were always complaining side. But what I want to say, like they should stop equating with the values. Actually, that's mean like there should be a difference. There should be a comparison between worth versus output. So why I'm saying this, because more emails, more reports, more meetings, and more unworthy things, like once you are doing in your daily life, it's not mean like particularly like you are doing a good underwriting. No, basically that, because that can impact your judgment. Underwriters, basically that their strength is a judgment, like a judgment, rational judgment. Okay, so stop doing the unnecessary things, particularly. So they should focus on like how they are judging the risk, how they are clear about how they are sound about the risk perfection. And what I would say, like sound judgment and sound informations, basically just that made a disciplined underwriting. And that is the core. That what I would say with my experience, that is the only thing. Once you make your rational, whatever the data you have, and you will equipped with what is internally in your pocket, and you're offering the things which is in your pocket, and you're made with the guidelines. Because in underwriting, we always saying like there is no justification for rates, like whatever we are offering. So if the loss had happened, so you cannot justify like, okay, rate was good or bad. No, only question will ask like whatever the guidelines, either they're followed or not. So that is the most important thing. Either underwriter has reviewed the risk properly. Okay, it was not like how the emails go on and how the things will go on. So ultimately these things. So that's my one piece of advice. Always be with sound judgment, because that is your tool as an underwriter, which I always say to my juniors, and that's it.
No, amazing, Abdul. I really enjoyed our conversation. Thanks, everybody, for listening. This was Inside Delegated Authority with Abdul Rahim. See you next time. Bye.
Thank you. Thank you, everyone. Thank you.